Hi, and welcome back to the WHVP podcast. In this episode of the podcast, the WHVP team sits down to discuss the investment of gold. We will cover the history of gold and its context and how it's been used in the world's economy. We'll discuss the advantages that gold can bring to a portfolio and the challenges that it can pose as an investment. Before we get into this, we'll give you an update on the WHVP's team's trip to the US and what it's been like. Now, let's get into it. Well, how are you guys doing in the grand old US of A?
I'm doing very well. It has been interesting 2 weeks. We started out in Miami, then we split up. I went to Chicago, and I'm in New York, and we're slowly moving towards the end of the trip. So I feel like I'm starting to get a little bit homesick, a little bit more every day. But the meetings have been great. It has been great meeting with clients. I have a hotel right next to Central Park, so I really can't complain. Also with the weather, we have been lucky. I've heard that Switzerland is snowy and gray. Here the sun's mostly shining and the trees still have some leaves. So it's quite pretty actually.
But it's still cold with you, isn't it? So I think I'm
Um,
more lucky.
well, I mean, it's not as warm as it is in your place, but it's certainly warmer than it is in Jess's place. I think it's maybe like 7, 8 degrees Celsius. I don't know what it is in Fahrenheit, but it's like with a light jacket, it's fine to walk around. So I like the weather.
Yeah.
I prefer that over the like constant summer in the places that you were at worse.
Oh, well, it's all right. It's not too hot, so I was very lucky too. I traveled Florida, so I did a lot of driving. I went up, or from Miami, I went over to Naples, up to Sarasota, Tampa, Orlando, and then back to Miami. And then I flew over to Los Angeles. So I'm staying in Los Angeles since last Friday, I think. Yeah, it's last Friday. So I had also a lot of very interesting meetings around here. We're in Orange County at Newport Beach, so a little bit all over the place. So it's a beautiful city, and I really love it.
Cool. Sounds like it's been a fun trip for you guys. And I mean, we're definitely excited to have you guys back in Zurich and see you again. But we're happy that you guys get to be in the States and meeting people. So that's definitely cool.
Yeah.
So today we are going to be talking about gold as an investment. We're going to try to cover kind of just a little bit of the history of gold as an investment and just a brief overview. And then we'll talk about kind of the advantages of gold and what they bring as invested, and then some of the challenges that gold brings as an investment. And then we'll just discuss gold in general. So I believe, Urs, you're starting us off today, correct?
Yeah, sure. So a little bit about the history of gold. Gold is in place as a currency for a long time. So after a period where people exchanged goods to each other, there eventually came gold into place because it was a limited resource, and it could be used as a currency, as a valuable good, which could replace the goods itself to trade. And so I think the first time gold was used in history was like 4,000 before Christ, so a long time ago. And then it also, of course, next to gold, there was silver, which was used, which was very easy to, or more easy to get and to form that you can use it as a currency. And then in the 19th century, there eventually countries came up with fiat currency, which was still backed by gold because it made it more easier for the governments to issue it and to control it. And then we had the gold standard for a long time. But with the world wars and with all the spendings of the governments, eventually the gold standard didn't hold up anymore because they weren't able to back their currencies anymore. So they had to give it up. After the Second World War, they took it back in place, especially with the US dollar. and the other currencies around the globe had a fixed rate or a fixed range of an exchange rate against the US dollar. So to give or some kind of stability to the financial markets and the financial system. But then in 1973, it was the US decided to skip the gold standard too and started to printing an enormous amount of money. And since then, we never got back to this gold standard. So here we are today. Gold is still valuable. Gold has increased in price, especially since 1973, when the gold price or the gold-backed currency was still in place. There was an exchange for about 35 US dollar per ounce of gold. I mean, today we are around 1,800 US dollar, and it shows quite a volatility in the last couple of years, and it has developed as an investment and is broadly used. So within the years, there have been a lot of different possibilities coming into the markets, how you can invest in gold. And there are many people, they have gold as a ongoing part of their overall wealth structure. And so that's where we are today.
Yeah, thank you. And Jamie, maybe you could speak on some of the advantages that gold brings to investors, or disadvantages that it brings to the economy in general.
Yeah, sure. So I think for investors, the advantages are pretty clear, because it is an independent asset class that is not perfectly correlated to stock markets. It is even leaning towards a negative correlation. So that helps with diversification, helps with stabilization in a portfolio. If you have some gold, that can work as a hedge against inflation, and that usually surges in price if we see a crash at stock markets or if we see uncertainty. So most recently during the Corona crisis at the beginning, we saw gold really thrive, right? Because people were so unsure and so uncertain about where everything's going to develop. That has been an interesting investment to watch. I think what we also should talk about when we talk about gold as an investment is that there's a variety of options of like how one can invest in gold. So there's the physical gold you could like purchase somewhere and then store in your home or in a vault at a bank. Then there's the metal accounts where you also hold the gold, like the direct investment into gold, but it is put into your portfolio. You can also hold coins, or you could work together with like an independent vault and buy some gold with them. And then there's the more classical investment vehicles that hold gold, like an ETF or a fund. And then lastly, there's also the mining stocks, where you can participate into the development of precious metals by investing into the mining companies that get the gold out of the ground. So I think that's also something to keep in mind, that not every gold investment is the same. And depending on what you're trying to achieve, one might be more make more sense over the other. But in general, I think especially now with the inflation talk that is coming back again, gold is an interesting investment and usually performs quite well in an inflationary environment, because currencies are losing value as well. Gold is not really affected by inflation. Those are some thoughts from me. What I also find interesting, and that's a more recent conversation and comparison that came up, is that a lot of people are now talking about like gold versus cryptocurrencies, because gold is like known as this storage of value, and some people are comparing the two. For me, they are very different, but I would be curious to hearing your thoughts about it, Jess and Urs. What you think on whether or not this comparison is fair or makes sense, or if those two investments are just completely different. I know I was supposed to talk about the advantages, but one thing that I also like to point out, which is then more moving into the challenges side, is that I feel that some people are overstating the value of gold. So while I do believe that it makes a lot of sense to have part of a portfolio in gold and precious metals, in my opinion, the added value strongly decreases at a certain portion of the portfolio. So in my opinion, unless you have like a very specific reason why I'd like to do that, having 30, 40, 50% of total wealth in precious metals or in gold, I believe is too much, because you are also having to consider opportunity costs. And I'm sure you, Jess, are going to talk about that as well. So that's just something to keep in mind as well, with all the advantages that they are limited to a like smaller portion to the portfolio. And that I would say that the problems are going to outweigh the advantages if you talk about really, really large portions in one's wealth.
Yeah, I think that's a very good point. When you look at gold and the advantages it can bring to someone's overall wealth, holdings, and portfolio setup. And so I'll just dive quickly into some of the challenges that gold presents, especially in the case where Jamie mentioned of when you have lots of amount of gold. So gold is it's a hard asset if you buy it in and of itself. If you buy a gold bar or you have gold coins, these are hard assets. And especially when you buy gold bars, if you don't have the corresponding paperwork to that gold bar, it's very, very difficult to liquidate that gold or to turn that gold into cash, because there's no proof that you own it. And so that's one of the challenges with gold. And if you're buying it and storing it at your house and you lose that paperwork, it's no longer, you cannot prove that it's yours. And to sell it, you know, maybe you can go around the corner somewhere and try to sell it at a pawn shop, but you know, you're going to get maybe 50% of the value of that gold. And you see that in a lot of those, you know, on every corner store in the States growing up, I always saw, we pay cash for gold. And I always thought, wow, you could just get all your money back from the gold. And then I started learning about the devalued gold that you sell there, because you can't sell it for the same price as you would be trading it through if you have a broker or a professional where you do all that through and all the paperwork's clear that it belongs to you and your portfolio. So that's one of the challenges of gold that can be challenging, of the physical aspect of gold. Again, if you put all of your wealth into gold, as Urs mentioned earlier, recently gold has been very volatile. And so if I have 50% of my portfolio in gold, and gold seems to, and I bought it when it was at its height at $2,000, and then it falls to $1,500, while I've essentially cut a third of my wealth in half because I lost so much money on that investment. And so I think where the advantage of gold comes in is it allows you to diversify your portfolio. If you overexpose yourself to gold, you put way too much risk on a portfolio that doesn't actually need to be there. And as Jamie mentioned with the opportunity costs, if I put all my money into gold, which is overall, we've seen an incredible increase in the value from 1973 to today. However, there were periods where gold was stagnant and it didn't grow in its value. And so you missed out where the market was growing in investments. You could have been there earning more returns that if you would have had tied up in gold, you wouldn't have earned anything back. And I think that these are one of the challenges of, you know, when you put gold into a portfolio, understanding what it is as an investment, when it's almost negatively correlated to the market, not totally, but it's not, it carries less risk. It also carries less reward when you look at it in that terms of that specific risk and reward principle. And so you shouldn't be looking at making, you know, a 50% return on gold in 1 year. The year 2020 was a crazy year where gold jumped 22% in a year. And that's amazing, but that was also fear of the pandemic that we were in. And so I think there needs to be a discussion of how much gold should be in a portfolio. And a lot of people really like gold because it's always had value, and its time horizon, it has grown in value so much. However, it needs to be looked at with that, how do I use this to diversify my portfolio, to put a piece of my portfolio in this to actually move forward? And so maybe as we transition into that topic about going to cryptocurrency, Jamie, that you brought up earlier, Urs, do you have any thoughts on cryptocurrency and gold and cash dollars?
Can I
Yeah,
just
sure.
can I very quickly jump in before we move to the crypto thing? Because there's two things when you were speaking, Jess, that came up that I think we have to mention as well. One is also the cost of having physical gold, because you said it's a hard asset. So if you want to store it somewhere, that's going to be a lot more expensive than a direct investment into a stock that doesn't need any storage room, that doesn't need to be insured, where you don't need any like security guards walking through the building that it is stored at. I think that's something that people need to keep in mind as well. And then the other thing is, coming back to the opportunity cost, how higher interest in other asset classes, so for example bonds and fixed income, how that can have a pressure on gold as well, because gold as an investment doesn't really pay any interest. So if the interest environment is high, or if interest rates are high, then that's usually also not very good for gold, because you're missing out on other opportunities where you could earn more. Just wanted to quickly add that, and very happy to hand over to Urs now for your thoughts on crypto and gold.
Yeah, so regarding cryptocurrencies, I think we don't have enough data yet to really know whether we can compare it or not. I mean, one thing which is for sure is that cryptocurrencies, the volatility of them, it's like insane. And in this regard, it can definitely not be compared to gold. The question will be whether cryptocurrencies will hold up in value over the long term and will increase constantly in value over the long term. And I think there it is very much a question of what cryptocurrencies we are talking about. I mean, we all know the big ones like Bitcoin and Ethereum, but I mean, there are thousands of cryptocurrencies in the meantime that are on the market, and a lot of them, they don't really have any value, or they don't have this kind of value which you're looking for when you do a long time investment, which is the case with gold. I mean, it should contribute to stabilize your overall portfolio or your overall wealth, and that's definitely not the case with cryptocurrencies at this moment. And so I stay the point that that we have not the track record yet to really honestly evaluate whether it is something that could be considered as an alternative to gold. So my current opinion is that it cannot at that moment, but that can develop in the future.
Okay.
And maybe about the storing cost, if I can add one point to that. Of course, interest rates are important. What is paid on the bonds? What are the coupons? But it is also very important to look at the real interest rates. So, what is the interest rate after inflation? And so, for example, at the moment in the euro area, there is a real interest rate of about -5%, because we have an inflation of about 6% currently, and the interest rate on the euro is already also minus 0.5, or what is it at the moment? Yeah, so we do have negative interest rates, and also with the US, where we see inflation over 5%. So at the moment, I think gold could be something which should be considered and should be added to your account. But it, as you said, it's there are time periods where gold maybe should not be that highly added to your portfolio as it is now.
Yeah, I think that's a very good point when you look at real interest rates. Yeah, coming back to the cryptocurrency versus gold, I think what's tough here is historically, as it was kind of covered, our cash was pinned originally to gold. and there's always kind of a commodity behind our cash, because in the end, cash is just a symbol of what it's worth. And currently, crypto its value is based off of cash. And so I think it's gonna take a long time for something substantial to actually switch cryptocurrency for gold. I personally agree with her. There's not enough data to look at that. And I don't know if you could say that cryptocurrency would replace gold, because gold is still going to be a physical presence. I don't think gold will totally lose its value. I think maybe in the future, maybe, I don't think this will happen anytime soon, but possibly you could see cryptocurrency being traded in for gold. So more of an exchange of what we use to trade. But at the moment, cryptocurrency is still valued based off of cash, of dollars, of euros, of Swiss francs, whatever currency it's valued in. And I think that's more of a topic to look at, maybe another podcast, but for me, it's a totally different thing. Maybe we can look at blockchain as being something that is more of a commodity, possibly, but it's still a system. And so it's quite an interesting topic that it even comes up, because for me, it's not comparing apples to oranges, it's comparing gold to apples. And so it's a bit different.
Yeah, and one other thing you should consider when trying to make this comparison is that in the past, in the last 2 years, we have also seen cases where cryptocurrencies were stolen from people, which is possible. And with gold, that's much less likely. So I think you're right. It is important to keep in mind that gold is a real asset. It's something you can touch, something you can store, and it's something you can use when everything else doesn't work. I mean, if in the worst case, if the internet goes down, what are you going to do with your cryptocurrencies? You can't really do anything. But if you have gold, you can still use it and you can sell it. And so that's a very important point to make.
Yeah. And as much as I love where technology takes us into the future, gold, as Urs mentioned, they first recorded it being traded as in exchange for goods in 4000 BC. And it's been here for the last however many thousands and thousands and thousands of years. And I don't see that it'll ever lose its value. I mean, you look at jewelry, even though jewelry sales might be down this year, we could say that that's just hard economic times. We still like to look at gold. I like looking at gold. It's still a very cool thing that somehow attracts us as humans. Cool. So I think we've run out of things to say then. I'm not sure.
I mean, I could talk hours about this topic, but I think it's really the idea here that we give a brief overview and an understanding of how gold works as an investment, and it doesn't make sense to go too deep into the details. And I mean, if anyone who listens to this podcast has any questions, I mean, we are always happy to answer any questions or to discuss this topic in more depth.
Thanks again for joining us on this week's episode of the WHVP podcast. If you've enjoyed our discussion or have comments or want to discuss anything that we've talked about in this podcast or any of our others, you can connect to us by going to our website at whvp.ch. If you want to learn more about our company, check us out at any of our social media handles at LinkedIn, Facebook, Instagram, or YouTube by simply searching WHVP. Have a great rest of your week.